Good morning, everyone, and welcome to the morning brief. Today, Wednesday, June 3rd, official number in the squadron still stands at 3. I know a couple of you are talking to some additional folks, and I do expect one new name in the room today. I don't see him there yet. However, some other things that I will share with you. Let me go over the overview, and then we'll get into the specifics on that. For our mission objectives, the standard big 3 tactical objectives for today. We're going to talk about the auto stocks. So I'm looking at a question there on the auto, or the comments there about the auto stocks. So we'll get into that. Horses, that's funny. I like it. But we'll talk about auto stocks. I don't particularly care for those, but we'll talk about them, which ones are better than others and why. And if you want to invest them, how to do so. And then as far as our build wealth incrementally over time, we are going to talk about covered calls today, which can be a confusing topic, but I'll pull up a specific Investopedia page. We'll go through that to make sure if you think you know what you're doing in covered calls, that you actually do, and please ask questions that you have there. We'll cover the market review, headline review, the long-term investments. There's the automakers that we will talk about. And then we'll do the market open with the short-term discussion, and then go off into the Q&A. For the Q&A today, again, that'll be covered calls. I did throw kind of my initial question there into the Q&A. You'll start to see some of those as some seed questions as we go forward. Okay, before we move into that, I'm going to share out the Chrome here for a second, and we will look at some new things I have out there. Okay, as far as for most of you in the room, you got an email yesterday, all but 2 of you actually. Got an email yesterday afterwards, which is the replay, and you should get that email on a daily basis. It'll come from steve@ototnow.com, and it will be a link for you to click on. Thank you for the one person who happened to say, yeah, it's private, I can't get in. I thought I had all of the settings set so that you could. So I will work on that on our end to try to make sure that today when you click it, you should be able to get in. However, just realize where that's actually directing you is to an On Time on Target YouTube channel, which you can see here. Please, like and subscribe below, click the notification button, all that social media stuff if you want to follow the channel. But the email, when you click on the airplane, it's going to take you here and give you the latest replay. I'm happy to announce that last night I released the episode 1 of the On Time on Target podcast. And what you have here with the podcast is basically an introduction of myself. Many of you have heard this story in the room of I basically talk about who I am, and I talk about the shock and awe mission. So that is available right now on the YouTube channel. I've submitted the podcast, and they've told me it'll take about a day or so before the actual podcast is out on iTunes. But episode 1 is in the books, so pretty happy about that. And then I'm trying to flow out an episode a day from now on, which may or may not happen, and then until I get to the weekend, and then I can catch up on everything. So that's the update as far as the YouTube channel. As far as the website, kind of a new look for the website. We had the resources here under home. We've moved them over to the resources tab. So when you click over the resources tab, you can see the how to day trade why you probably shouldn't video, all the rules for the day trading challenge, which I'm changing today based off of your inputs. So thank you. And I will put the new video out for that. It's pretty simple, so it'll be easy to redo. When we talk about risk unit, if you need more, I do see a new name in the room now. So if you need more on what is a risk unit and how to set it for day trading, there's a video there. There's a sample morning brief. And then, of course, if you want the risk unit Excel spreadsheet, it's available for download right here. So exciting new things across the board for On Time on Target. Okay, over to the market review. We're going to go and take a look at where we've been first and go from there. All right, this is the 1-year review of the SPY. You're used to seeing this chart 1 year left to right. We had the big run up. We had a 35% drop. I saw a headline yesterday, which may have confused some people, but we are right now 40% off of the lows. So when you look at the March 23rd low down in here, this move up to here, we talked about it. We were stuck in the channel trade in here for 275, 295. When you come out of the channel, however you come out of that channel, it goes significantly in that direction. We've seen another pretty healthy move up, and the futures are up today. That total move from the bottom here to here is 40%. But wait a minute, Steve, you said this from here to the top to the bottom was 35%. That's where it can get confusing. So remember your math 101 from way back when, losses hurt more than gains. So if you lose 50%, you have to make 100% back to even be back to even. So that's the power of, if you have dry powder or free cash or put money to work in here, how powerful that is to be able to sidestep some losses. You won't ever be able to sidestep them all, but to sidestep some and then be able to get that full gain right there. So remember, if you lose 10% and gain 10%, you're down, right? So if you think of 100, you lose $10 and it's 90, you gain 10%, that's $9. You're not back to even. Same thing if you lose and then gain. So that's where we are. As far as the specifics of today, I'm going to take this out to a 5-minute chart to kind of show you it's really basically a straight line up. So in spite of the protests, right? So different forces going on. There's the economy opening. I do think one theme that we've kind of seen from the protests are that people aren't quite as concerned with social distancing now. So they're out en masse, and kind of the COVID-19 talk has largely gone from the headlines, and it's all about social unrest, race relations, and the things that are now the new topic of discussion that is taking the headlines there. But don't forget in the background, so those are obviously negative with the social unrest. However, the positive part is if the opening of the economy is going as well as people hope, then the market is, of course, just going to continue higher. As far as our earning calendars for today, Home Depot is a commonly held stock out there. I own some as well. Nice big juicy dividend, $1.50 per share, basically. Nope, it is $1.50 per share. So let me get the right one. So yeah, $1.50 quarterly, right? So $6 a year for every share of stock of Home Depot you own. So don't forget that that's the free money that's out there in the market. All right, we're going to swing now over to the headlines of the day as far as what's going on at CNBC.com. We'll do a quick refresh. Looks like the Dow's up over 1%, pretty impressive. And the NASDAQ's only just a little bit in the green. Remember, we're still in that kind of situation where tech made the strong comeback. That's mostly NASDAQ, and now kind of the rest of the stocks are catching up. If you were to put that in terms of growth and value, the growth rages up higher first, and then the value kind of catches it. Well, it'll never quite catch it, but it's the value plays that will look stronger, after all the money's been made in tech, and you're trying to put money to work. That's when it's time to pivot towards value. So around the world, the U.S. market has been helped significantly from the European market and the Asian markets that have been nice and strong as well. So they're not dealing with the social unrest like the United States. There's still some protests going on around the world, but largely it's a U.S. deal. So their markets are streaming higher across Europe. When you look at the Asian numbers, still kind of the after party going on of the resolving the Hong Kong situation, which caused a lot of trauma over in Asia. So things looking good there as well. You looked at our market yesterday, up over 1% in the Dow there. As far as the bond market, continuing to get healthy. So again, we want that 10-year up towards 1% is really what we're shooting for. Then oil markets actually got a negative headline this morning. If you remember, we were up like 5 days in a row, 6 days, 7, something like that. It came down a little bit, had a real positive headline that OPEC's cutting back production. And then the headline this morning was, well, OPEC thinks some people are cheating on that and actually not cutting back production after all. So it's really not too bad of a hit compared to that, compared to the headline anyway. All right, as far as into the precious metals, again, gold's your contrarian play, so I expected it to spike with the social unrest. So far, it has not. People are putting their next dollar to work. They're putting it into equities and bonds and not into precious metals. I am going to put a piece out, I hope tonight, if not tonight, tomorrow, talking about the election and how close it is, really, 6 months right inside of that, actually 5 months, and how to do some portfolio protection. So putting a separate video about that, and that'll be our topic, I think, for tomorrow as we roll in. Okay, let's see what we've got for headlines. Did get the jobs number this morning. Smaller drop than feared. So again, bad news, but it's good news because we thought it was going to be worse. I haven't really, this is the first update I've seen about the protest. Hopefully it goes back to more peaceful protests. Of course, protest is the American right, but the being violent about it and tearing things up is not. So hopefully that calms down some. Stimulus check's kind of funny. Not only stealing it, but remember, if you did not get automatic direct deposit, if you got a debit card in the mail, a lot of people can think those are scams. They're actually not. That's actually a real card. You can pull it up and Google it online. It's blue. It's got some stars on it to make sure you've got the right one. But that is legitimately a couple $1,000s. So do not pitch it. Good mortgage number. Interest rates, I saw the average 30-year was like 3.3 or so. So that's good to kind of get the housing market going. Amazon's putting out a June 22nd, kind of Amazon Prime-ish type of day. So that should be not only good for sales, but continuing for the Amazon stock to run higher, basically. Not worried about Amazon at all. Zoom, you know, the company that we're using right now, they crushed earnings yesterday. Look at that, 169% during the quarter. So again, we talked about that a little bit during the day trading session yesterday. It has run up a lot. The day trade was long. It actually came in somewhat yesterday and didn't quite finish down as thought as far as some of us thought, but we'll take a look at it again today. Okay. Let's go on up to the big board at Schwab. And we'll talk about the automakers. Okay, so what you see upper left there, if we can bring that back to Ford F, please. What you're going to see from left to right, you got Ford, GM, Fiat Chrysler, and Toyota, kind of the four big American names. And then at the bottom, you have Tesla, which obviously is an American name still, but it's also the, of course, the leader in EV vehicles. And then NIO, you may not be familiar with, or maybe you are because you've heard me talk about it before. This is the name I was in. It cratered, I got out, and it has basically gone straight up, annoyingly, since I left it. But there's good news out there about the NIO company. So let's start in the upper left. Ford, big American name, best truck maker in the world, no doubt, that sort of thing. However, they've suspended their dividend, so it's not as attractive right now. It was a huge dividend. It was 5% going into this, and of course, when the stock craters there from 10 down to $4, a lot of people think that's, you know, in the height of that, if you can pull the trigger on buying there on that during the waterfall, then you got rewarded a little bit. But that's more of a trade. I would not be inclined to hold any of the big automakers for any particular long period of time, just because of you think high capital requirements. You have to think the expensive paid American worker, highly specialized, but also expensive, possibly been there 20, 30 years with pay raises. So kind of a tough business. And then of course, if you bought a car lately, you go in there and basically all that margin, you try to talk them out of them. So, and yeah, pension commitments, that is a great point as well from somebody who's got some experience up in the automaker world. Thanks, Predator. Okay, so you see Ford, you see GM has bounced a little bit better there. I don't invest in any of these, but I do hold both Ford and GM bonds. So you can get their bonds for about 85 to 90 cents on the dollar. I have no doubt that these companies are going to survive. And if we were going to lose one, it's not going to be Ford or GM, or Toyota, to be honest. I'd be more worried about Fiat Chrysler, if you will, because it's a far more confusing company after the merger. So that's what FCAU is. is Fiat Chrysler there. So again, the big falling off the cliff and coming back up. I don't know if they suspended their dividend or not. But then you have Toyota off to the right. Toyota didn't fall nearly as far as the others. So when you think of the Toyota brand and as far as quality of car and things, didn't fall nearly as far, and it's, you know, kind of recovered more than most. And then you have Tesla. So Tesla is a cult stock. You've heard me talk about that. It is as far as you know, the down there at 200 back earlier in the year. It's kind of moved from 200 to 800, and then it dipped down below 400 during the crisis, and now it's back over 800. Elon Musk, very charismatic, eccentric, billionaire type CEO. Obviously, I think he's carrying that stock higher on his back. When you look at the Tesla numbers, it kind of reminds me of the Luckin Coffee numbers, is it almost can't be true. And David Einhorn, who has had a terrible stretch recently because he shorts companies, but has come out and pointed out publicly many holes in the Tesla balance sheet of the accounts receivable can't possibly be true because of this, and this, and he points that out. Well, the stock market doesn't care. Stock keeps going higher. So as far as Tesla, it's not a name I would recommend. I have tried to short it before and been burned all the way up to about my shoulders. So I don't know when I'm going to hop in that again. But if it does start to fall off the cliff or there's a negative headline, of course, any signs of fraud, that's as fast as you can get the keyboard and put a short in on Tesla stock, because I do think it's a little bit of a house of cards. You've heard me talk about the accounting. Normally you have general GAAP, GAAP accounting. They do not use that. They use non-GAAP numbers. So they can say things in a little bit different language than everybody else is using. So beware if you buy the car, not the stock, is what I tell everybody. Okay, and the last one's NIO. NIO's a Chinese EV firm. There are many of these. If you're bored right now with what I'm talking about, go over to another screen and pull up NIO.com, and you can see some of the coolest cars you've ever seen. Or save that for later because you're paying close attention to every word. I like it. The NIO has, I thought this would be left for dead. You can't trust Chinese companies and what they say. That's kind of the lesson from Luckin Coffee that we had. You can see there how far it fell. Basically, it was going under, right? And now it's not. So positive headline, Bank of America gave it an upgrade. They did have great May numbers, at least they say they did. So that's a buyer beware. If you need a speculative stock and you want to take a flyer on something, then take a look at NIO. So that's what I've got for the long overview. Let's go over to the short board and take a look at things. First one, let's pull up NIO actually. NIO is a long. It closed at 470. It's gap. I'm looking at the numbers at the upper left if you want to follow along. Closed at 470. It's gapping up over 5. 5 is again that magic number to where at 5 mutual funds can own it. I don't know the inside investing rules as far as how many days they need to own it, or how many days it needs to be above $5 before they can buy it, or is it as soon as they see a spot price above 5 they can go in? I don't know. But things that go above 5, if they stay there, they continue higher. So not really set up with our day trading strategy, but it is gapping up on a good news story. So let's take a look at some other things. Click to the left top 10 volume tab there. So we'll go across our tabs there. Again, NIO sitting up top. It's an 8% gap. And that's what I was just talking about there. And 5 million share volume. So it is in play. Like I said, for our minimum or for our day trading strategy, whether it's real money or play money, we're looking for a minimum of 100,000 shares pre-market, and that qualifies. All right, Norwegian down a little bit, not enough for us to really worry about. UGAS, again, is a natural gas play, not going to touch that. Dynatrace, 4% isn't quite enough to really look at, so let's move to the next tab. Okay, here we kind of look at that volume first to see what qualifies in 6 figures. So crowd is CrowdStrike. Go ahead and double click that. We'll bring it up on the left screen. So it closed at $92. It's up at $99 now, so a pretty decent move up. You can see lots of headlines out on CrowdStrike this morning, and it's an earnings gap up. So surprise profit, there you go. At a set to open at over a 9-month high. So a lot of momentum behind the tech names. We've seen that when those gap up, they tend higher. So that goes on the list for a potential long. Okay. Not enough volume and anything else except for Tesla, and the gap's not big enough there. So let's look at the decliner, see what's going short. Remember, as this comes up, we do have a market that's up over % pre-market, so it's very tough without a negative headline or a negative news break for us to find a name that we would like to go short on, because the market, you're swimming upstream against the market, and you generally don't want to do that. Okay, reinsurance group, let's bring that up. That qualifies for our gap and volume. I'm not familiar with them. Okay, $500 million stock offering. We talked about this yesterday, and I believe both of those trades failed. That when they release the stock offer, that devalues everybody's stock because it cuts your equity portion. So that's a negative headline, gapping down 10%. I don't like it, but if we can't find anything else, we'll watch RGA short unless I find something else I like. Click on the gapping down over here, see what we can find. Ambarella gapping down 4%. That's a name from the past. Right, Phantom, we changed your name. If you don't recognize your name there, Phantom, but that's who you are now. Just to avoid real names in the room. Click on, let's put up HQY. They're down 8%. I don't know who that is. Let's see what their story is. Health equity. Not pulling anything out of that. They're at 62, gapping down to 58. Really not a lot to go off of there, so don't want to take a swing at that one. Huntington Ingalls, we talked about that yesterday, right? Shipmaker, let's click on that. It's a whopping 15 volume, so it's not going to qualify, but there you go. Don't make ships, kids. That's what you just learned right there, at least in the past 5 days or so. Okay, obviously the TVIX is a trading vehicle, so we aren't going to touch that. Go ahead with the next tab. OIS. OIS has been in play. It had a huge move up yesterday. I do follow it. I don't personally own it, but I know someone who does, who won't shut up about it. So click on it, please. Look at this thing. So it has kind of done the get above 5, stay above 5. Its previous close was 514. It's gapping up to 570 to 580. We definitely have to look at OIS long because it's been in play. See if we can pull anything off of the headline. Okay, will serve until she fills the term previously held by Cindy Taylor at OIS International. Scroll back down a little bit. And up, it's that next paragraph right there. Simmons will serve as previously held by. Okay, can't quite decipher that and why it would be moving markets, but certainly with the gap up, we'll to keep an eye on OIS long. All right, if you're seeing anything out there, there you are. Let's look at cake. Is that Cheesecake Factory? Yes, it is. All right, gapping up from open close at almost 21, almost 23 now. 25% opened. Not a huge storyline, but it's been kind of beat up. Let's take that chart out to like a 1-year chart on Cheesecake and see if see what we've got. Okay, so when you look at that chart, that does make it compelling. It was up at 40. It has only recovered. It bounced off of 15. It looks like up to 20. So that's hardly much of a recovery, and it's gapping up today. So I think cake long is at least worth putting on a chart. And if you want to take that for your day trade, for the daily day trading challenge, then give it a shot. Micron MU, been on fire a little bit lately. gapping up. There was a good news headline on Micron the other day, and you can see kind of the move there. Closed at 47, up at 48. You can check that out if you want. And let's look at the other one, Lyft, LYFT. Also gapping up, closed at 31.70, gapping up into the 33s. Strong earnings for Lyft. And let's look at GOOS. Canada Goose Holdings. I want to say this is an apparel company. Gapping up 5% on earnings. I probably wouldn't touch that right now. Okay, so really the only thing we have is that RGA short. Put up, click on RGA. Actually, we didn't put it up in the screen there. We'll take a look at that chart. So again, not much news other than it's a big gap down, missed earnings, I believe, from close at 94, it's down at 83. So we'll take a look there. Go to the last tab real quick. Here's our Cheesecake Factory. It does have the volume. If you're interested, CrowdStrike has the volume. Lyft has the volume. So all of those are plays. Dynavax would be a continuation. That's been on the move up. It's down there at the NDVAX. I'm not interested in it, but it is in play. Okay, let's go over to our big screen on the right for TD Ameritrade. Let's put RGA short in the big square. We'll take a look at that. We will put cake in the upper right. And let's put OIS down in the lower right. We'll keep an eye on that. So you can see both those are kind of thinly traded. Okay, so that's how we'll have our board set up. Okay, I see Lyft going in there. Yeah, put Lyft there instead of OIS. Okay, go ahead and start entering your trades. I'm going to go over to the main board and talk about the rules again real quick. Again, the rules for our day trading challenge, free to play. This is, don't bother with this if you're doing an actual money trade, but set your risk unit. Your goal is to risk 1 to make 3, obviously. So if your risk unit is 100, you might set if you set a 40-cent stop, you're going to buy 250 shares. You can go into the math later on that. Okay, the new competition rule. So as you enter your trade here, the changes are in bold. So again, the window's open right now to put your trade in. And actually, while you read those real quick, I'm going to put my trade in while I pick it here. What was I going to do? I will take RGA short with our price point is 83. I'm going to go $1 stop, and I'm going to enter at 3, and then out at 20. Okay. So there I am. I like taking shorts. I don't have much faith in that short, but I will take a short today, so at least we can talk about it and learn from it. Okay, 2 minutes to the open. So here are the examples. You also see examples in the chat room. So just pick a stock, throw long or short, put a stop in, please play. So we've got 8 people in the room total. So let's get some 8 trades in there, right? But long or short, you can put your opening minute, which you get the open price at that minute, and you can put a closing time. So if you want a short trade, you can put it open. This one is open for 12 minutes. If you just put a closing time, then it would be you open right at the bell, and then you close 5 minutes after the bell. And we'll go back and score them as they go. The only other change is instead of getting the best price at your closing, you will get the closing price of that actual minute that you call the close. All right, got a cake long. Predator in at 2, out at 5. I like it. So let's see, 3 trades in there. Let's try to get 1 more at least. Until the bell opens, that's when you have your time. Okay, over to TD Ameritrade. What the heck just happened in RGA? Our bell is silenced. So that was the opening bell. Let's see, Cake Long at the open is the one we've got in play. Look at that. So Cake Long, what's your stop burner? Or what did you intend your stop to be a few minutes ago? So we can put that in. Let's see, Lift opened down, but Predator wants it to start at 2 minutes. So again, he's not live. He hasn't taken his trade yet. And what did I put at mine? Enter at 3. So at that 3rd minute is when we'll take a look. We're still in minute 1 right now. All right, Cake almost $1. So depending on your stop, you would have actually probably made your 3R already with a normal 40-cent stop. So Cake Long was the trade. We'll see if it holds because I think you'd already be back out of it. Okay, we're at minute 2 now. So RGA did that backup. Remember, and the reason you want to take Cake Long at the open, bought 500 shares. Just need a stop from you. 40 cents or whatever, so we know what to measure as far as ours, right? Okay. So we're at minute 2, and what we're going to do for RGA on the main board, since I called minute 3, as soon as minute 3 starts, we'll put my entry price there. I will let you know. Kind of, oh man, look at that, RGA is rolling over before I get it, so I don't get credit for any of that. Cake's doing just fine long. Minute 3, can't get here fast enough because I want to be in this trade. There's minute 3, so 86.50 is the open. So we'll draw a line right there, 86.50 on the dotted line. Okay, and then my stop was $1, so 87.50 is my upper stop. I have to stay below 87.50 in order for my trade to work. And my 3R point would be down at 83.50. That is where I would get my 3R gain when I'm looking, which is what I'm looking for. So again, those will be marked up on that one, and we will keep watching that to see how it plays out. Okay, Predator went into at 9:32 and is out at 5 minutes. So let's check that out. And that was on Lift. So 9:32 at the open, and then it closed down there. So it looks, yep, we're going to try to figure that out here in a second. Yep, that was the close of that one. So 33.60 is the, yeah, it's screaming higher there. Go left that way. There you go. All right, 33.60, and then the stop was a 20-cent stop. So 33.40 is the lower stop. And then the 3R point would be plus 60%. So up at 34.20. So it already hit that. Go ahead and draw us 3Rs in there. So you're well above 3Rs at this point. And you called you were going to be out at 5 minutes. Look at that thing scream higher. So wow is all I can say about that. Nice call on Lift. We'll see if it holds. Yeah, you're actually every set of dotted lines on Lift is an R unit for you. It's kind of, since they're 20 cents, so that kind of works. All right, so we're at 1, 2, 3, 4. So it's wherever this bar closes, and then Predator's trade will be done. So it looks like a nice trade from the Predator there. So all 3 trades are working that I see in the chat. Yep, looks like there's only 3. So I'm looking over at Lift. That one's about to close. Can't close fast enough, right, Predator? So that open was 33.60. All right, it closed out. Go up a little bit. Looks like maybe 42. One more. I'll give you 43. 34.43. 34.43. So total gain was 83 cents into a 20-cent stop. So that's a 4.6 R. Nice trade for the Predator there. And honestly, if you would have taken that real time, that's about what that would have looked like. That was moving up so fast that when you hit that 3R, depending on how you have your trade set up, I think you're on TradeStation there, Predator. Depending on how you have it set up, you might not have sold it all. So sometimes how I used to do is I would have the whole amount in there. Say it was, let's see, at 20 cents, that'd be 500 shares. I would have 500 in there, but then I would go ahead and put it down to 300 real quick and just sell out of 300 and let a little bit more ride. So it's not like it, kind of went up there and just touched it. It blew through it. If you had an actual stop in, that's going to go to a market order and then cut you out from there. All right, let's take a look at cake and see where we are. All right, 60 cents was the stop on cake. Cake went straight up from the open price, looks like 22. We're going to get to draw that on there. So there you go. Move it up to where the bottom is just in that green. So a little higher, a little higher, a little higher right there. So 22.75 at the open for cake. So 50, what do you say the stop was? 60 cents. So 22.15 to the downside. You didn't have to draw it. It's not even close. And then on the upside, that'd be $1.80. So that would be 24.55, which is probably off the screen. So really the top of the screen, you can kind of think of that as conceptually as 3 R's. So all of those are working. Predator's out of that lift trade, so let's take a look at some other things. In the lower right, put OIS. Remember that was a long that we were looking at. It's down at the $5 level. So it opened all the way down at about bottom of that one because it's a green. It's right here is where that opened. So 553 or so is where that opened. So that's one of those at a $5 price point. You're probably using a 10-cent stop, using 1,000 shares. So you would only really need it to go 30 cents higher. So about to 585. That would have been darn close to tricking you out, getting you your 3 R's almost right away. So it's kind of peeled back most of that, but I still like OIS long here even just because it's got so much momentum behind it. So OIS would have worked as well. Let's go ahead and say lift NRGA. Let's look at crowd CRWD in the lower right. All right, this was a long, so that it opened at 100, basically even, and then dropped down to 99, went screaming higher to 103, and now it's back below 100. Almost any way you put it, you'd be stopped out of the trade, depending on what you're trying to do there. So that probably would have been a failed trade. You might have been very lucky if you got in at just the right time. If you're sitting there watching crowd and you're waiting for a little bit of a setup, which you should as a professional trader, you would avoid all of this. So you would not actually be in the trade because it's just moving too fast. You do have to need for it to settle down a second and then go. Okay, over on the big screen, my trade's in the negative now, up at 87. So again, if it touches 87.50, I'm going to be done on my RGA short trade. So we'll keep an eye on that. And I said I was going to be out at, I want to say it was out at 20. So I'm out at the regular time. And then let's see, I believe burner is, yep, the full window. So we've got some time there. So another 10 minutes left on these trades. Okay, looking at the big picture market, if you want to look over to the left-hand side, you'll see the gainers so far. We will check out the how the overall market's doing. But if you look on the left side at the big board there on pipes, yep, those are some calls. We'll talk about those in a minute. Northwest Bio has been in play. It had kind of that big move down, but it's been coming back from that. PRU is Prudential. We talked a little bit out loud on how maybe the insurers would be affected if the rioting continues. So that's an interesting theme. I think it's probably too minimal, but we don't know how long just like COVID, we didn't know how long that will go or is going. Not really in the headlines anymore, but it's still there. BRBS is Blue Ridge. That's a small bank. Lebanon Citizens is a small bank. We talk about regularly. That's Realty Income. That's bounced up pretty well. Remember, we gave a strong buy recommendation on that the other day. VTR is very similar to O. That was also on our big board the day we talked about REITs. It's a healthcare version of that. Got GE bouncing around. GE again was beat up hard, so it's got room to run. BXMT, Blackstone Mortgage. So, and RTX, that's another name we talked about during our defense stock day the other day. So some pretty strong names on the way up there. Let's see what's going down in today's market. Okay, SHRMF, remember that's Shroom Fund for psychedelics. There's some thought that psychedelics are going to follow the marijuana play and continue to lose money. That's a joke. But the as far as an investable theme, nationwide legalization, we shall see if any of that works. DKNG is our favorite Donkey Kong. Just kidding, a DraftKings. But I did have a client call it Donkey Kong the other day. Pretty funny because it has been on like Donkey Kong. It's normally on our big board. We've talked about that. It went up almost 45. It's probably hanging out around 40. It's on the right side now. I can't see it. That's okay. We don't need to pull it up. But yeah, that's profit taking. Is it time to stay in or not? You don't know. Let's see. GLD is gold. That's on the way down. Really not much is going down at all, let alone significantly. So overall, that's pretty good. Okay, I just busted out of my RGA trade. So I am out. So it's between the Predator, which is already locked in at a 4.6R, and Burner over there with Cake. We'll keep an eye on that. Again, he's got 8 more minutes of gains. So on the main board there, just go ahead and put SPY in. Again, this is the S&P 500, so you can kind of see the movement out of the overall market there. So still looks like the SPY's up 3/4 of a point, and the Dow's probably up, still up over its point. Well, actually 3/4 of a point on the Dow as well. Okay. Oh, you guys can watch that trade or not. We're going to talk about some of the questions that came up, and now's the time to ask your questions. If you heard anything I said, it can be about any topic that you have out there, or it can be something new. Like, hey, should I buy Snapchat right now? Put it in the Q&A, and I will answer it for you. All right, scanning the chat first. Yeah, automaker pensions, well, any company that has a pension, that's a problem. It's a terrible math problem. And I will say this, is when you look at big insurers and pension funds and how they invest, very similar to how I invest personally, which is I like individual names and I like individual bonds. However, there's not an option when you think of safety for the Harvard Endowment Fund. They can't buy CDs because they don't even pay 1%. The municipal bonds are paying next to nothing, even though they're tax-free. Even the investment grade bonds have taken a hit. I used to tell folks 4.5% to 5.5% is what I can get you. Just let me get to work. Well, now it's very tough to get that 4.5% to 5.5%. You can, but if I'm buying 10 bonds at 10,000 each over the week, it might take me all week for something to hit my criteria. And again, bond buying is different from equity buying. Equity, you look at the board, you pull the charts, you kind of figure out, am I to get an entry point or not? If you're not, you wait. Maybe the ship sails without you, maybe it doesn't. But in bonds, you put in your criteria and what you want, and then you hit open, and it sits there all day, and people see that open bid, and they can respond to it with, okay, I've got these bonds that fit your criteria, and they populate. And then I kind of scan through and I see like a million companies I wouldn't touch with a 10-foot pole, looking for the company that I do recognize, a General Electric or a Goldman Sachs or something like that. And I go, yes, that's the bond I want. And then I buy it from there. So it's a little bit difficult out there. And so pension funds are having trouble. The only game in town is literally the stock market, which also helps the stock market rebound significantly from these things. Okay, every trades are in. Okay, I see the scoring sheet. Are you showing a graph? I'm getting a thumbs up that I am. Oh, my bad. We went to the scoring sheet and yeah, that was on me. I should have taken you over to the TD Ameritrade. Sorry about that. Thank you. Fixed now. Got it. Yep. I'm the last one to know. So my text all over it though. All right, over to the Q&A section. Apex Predator, how far do you believe the market is looking forward? Obviously, unemployment and riots looting are negative in the short term. I would say well past any unemployment or rioting concerns. So when you, nice. When you look at the overall market and how forward looking it is, literally 3 to 5 years. When Warren Buffett would talk about buying stocks, he would say his favorite buying point is forever, right? So his favorite holding period, is forever. So when he's looking at least 5 years plus before he puts his capital to work. And if you can learn to, you kind of almost have to train your brain, because when you're looking at things like, your app 10 times a day, or you're looking at headlines, you can get sucked into this short-term stuff. You can get sucked into headlines, and that's why we review them every day. We want to acknowledge them, and they put things into motion. But as a long-term investor, which again is the first half of this presentation, that gives me buying opportunities. So if Apple and Tim Cook have a negative headline, I'm looking like, okay, good. I mean, I can't control the headline, so it is what it is. But if they get a bad headline and it's a long-term investment, I'm either in, or I'm looking to buy more of, or I'm looking to enter, then I go, okay, good. See how far the stock gets hit, and then I can buy there. So that's really how I look at the short-term news. The long-term, everything I buy, do I hold it 3 to 5 years? No. I say, obviously, I talk openly about Apple, and you can come get my Apple from my cold dead fingers someday, because I will probably take it to the grave. If Apple goes down, if it gets hit by 80%, I'm probably buying more. I'm not going to let go of the ones I have with the cost basis from a decade ago. So that's kind of how you want to think as far as your long-term investing. So good question. Go ahead and mark that out. Okay, I did see a couple of things in the chat. $3.99 from Burner there. I assume that's actual money. Very nice. So again, for the 2 new names that are in the room right now, we have the daily day trade game, which is really just a game, and it's kind of fun, so please participate. And then you can also take it actual in either real money or a play account. So all right, $3.99 with cake. Man, that thing screamed higher. As far as the membership, what he's talking about there, if you want to join, again, this is the last free week. Go to ototnow.com. You can join for a month for $25, so a little more than $1 a day. If you want to get a long-term membership, a 2-year membership was $450. That's $450, and it still works out to about $1 a day. So pretty good deal. I think my time's worth $1 for an hour in a day, but it's up to you. Would love to have you. Nice job. Yeah, you should go eat at Cheesecake Factory today, because that their stores are open, because we saw that headline news, which is what's moving it higher. Tell them you're a shareholder for 5 minutes. Oh, that was a good one. I like it. Priority seating, please, for Mr. Burner. Make them call you Mr. Burner when you're there. All right, buffoonery on my part, that happens. Yeah, when you do take these actual trades, again, for a couple of the new folks in the room, if you want to try to do it for realsies, then go to TradeStation. You can do it through TD Ameritrade if you want, but TradeStation's kind of is where it's at. Burner, I think he's on Thinkorswim. But anyhow, either of those platforms, you get a paper account, which is play money, and go through all the switchology. And the switchology, it's tough if you get in and out of a day without buffoonery. Just like flying fighter jets back in the day, it is very tough to get all the switches right all the time, under pressure, high speed, and that's what you're looking at here. Okay. Yep, TD Ameritrade. Okay, I think we are at 1 minute away from 50. So how's our cake trade doing? Let's see, at a 60 cent, I think we're up around the 2-hour range. So it looks like it won't be close there. It looks like Apex Predator will get the first win, but we'll let that time out. Okay, on to the last topic for the day. We got 10 minutes left. I'll talk about covered calls and go back to the green up here for the daily. So if you reference upper left of the think pipes here, you see QCOM. See if you can move that column to the right so you can see the full, just that part. It's okay, I can use the BX. So BX below it, Qualcomm, you can't quite see all of it, but highlight this BX. Okay, in yellow there. So that is a covered call. So that had, and put BX in the big screen. And I'll show you what I'm talking about. Okay, this is a covered call for BX is what you're looking at in yellow. It is for 09-18 is the 2009, so it's 20 is 2020. And then the 09 is September and September 18th. The strike price is 60. So over on our chart, we'll draw a little line at 60. May have to back out to a 5-minute. Actually, back out to a daily. Yeah, but go ahead and back all the way out to a daily chart. Okay, so, and draw a line there at 60. So you can kind of see what everybody's talking about, 60 flat. So what in this situation for this call is you could either be a buyer or seller of this call, but what if the buyer, if you went out and bought this call, you're saying that I'm going to pay somebody, the seller, some money, that if this stock gets above 60 before September 18th, then I get all of the money for that profit. So if you show everything above that, if it goes all the way up to 66, don't need to draw it, but just think if it goes up to 66, you're going to make $6 a share times 100 shares, which is an options contract, so that's $600. Okay, a seller of the call, which in this case, this is actually a sold call, that person is thinking that is received money from the buyer. We know, say it's $1.40 or whatever. So $140 from the buyer for selling that call. So that goes into the seller's pocket. And now the seller who owns these shares, 100 shares of BX, which is Blackstone, if that price goes above 60 before September 18th, the buyer of the call or the owner of the call has the option to take those shares at the strike price. So obviously if they take them from the person at 60 and the shares are worth 66, then they could keep the shares, or they could turn around and sell them for a profit. So that's kind of the basis. So what happens if you're the seller, and in this case I am, what happens if the stock continues above 60, which I don't think it will. I think BX will stall in the mid 50s for a while, and we got an election coming up. So I've put a covered call on several positions out there, and that's when you would use them. We'll go into that second. But basically, if the stock price does get above 60, I simply buy that call back at a loss and sell another call at 65 for just as much money as I had to pay to buy the call back. So therefore, I can roll that call. That'd be out and up. I may have to go to a further expiration date to make the price work. I may have to go to December, but I basically can buy the call back that's out there and sell the one and sell a new one. So you basically can roll those, and that's what if you deal with options a lot, that's what you're doing. You can see options when you look to the left. The BX option is only up 4% today, but the JP Morgan option, which is a 2022 option, all the way out there. So January of 2022, so that's 18 months from now, that's up 32% today. So Berner, you had asked about trading options. I would tell you that you can, and they do move every day because it's an option, so it's a derivative. And the math involved, though, is significant. So just consider whether you want your brain to hurt the rest of the day because you took a 5-minute options trade, because that's how confusing it can be. Okay, go ahead and pull up Chrome and click over to Investopedia. You've heard my words, but let's look real quick at what is a covered call. There we go. So yeah, you can kind of read that on your own while I'm talking. I will skip right down to, well, there are a couple things come out. Generate, there you go. To execute this as an investor holding a long position. So say you have your Apple and you have 100 shares of Apple and you really plan to die with it, or 20, 30 years, maybe not necessarily die with it, but you're going to hold it a long time. And say that Apple's run up to $325 a share. Pull Apple up on that one. You can sell a call, and I have my stuff personally, I have my stuff covered all the time. Sell a call to somebody at 340 or 350. Put it a couple months out, sell it out there. They'll give you $400 or $500 for the right to buy that option from you. And you take that money and you put it into the account, into your cash position, and that way you can go off and buy other things with it. It is literally a fantastic way to generate income. So when you read that first paragraph there, that generates an income stream. So all those years when people say, I wish Facebook would issue a dividend, I chuckle because depending on who I'm talking to, I generally won't say anything because it's a long conversation. But if it's somebody that's actually somewhat fluent in options, I would say, you can cover that up with some options and generate your own dividend. If you sell an option every 2 months, even if you're getting a little bit of money, you're generating a dividend. And options income is taxed as interest, so it can be significant. But that's a good problem to have. I will take all kinds of tax problems off of being able to generate money. It's called a cover because it goes over top of those shares. If you're in an IRA, you can use options. So for those that are kind of retirement account only people, you can use options in there. Only covered calls and a few other things. Cash secured puts, topic for another day. But if you have 100 shares of your Apple and then you have your one call sitting on top of it and you decide to sell your Apple, you can't. You have to buy the call back first before you sell your Apple. So what happens when the stock price starts going down? If you want to sell that stock, which happens to me, I have to buy the call back, which again, if the stock price is going down, you've made money on that call. You didn't make all of it, but you've made money on it. So you take the money and you sell the stock. If you are in a taxable account and you have options 3-level trading, you can have the call up here that is in the green. It's going to make money. If the stock starts falling, you can sell the stock out from under it. That is now a naked call. Whole different level of risk. That's why you have to have a specific approval to do it. But it is literally a no-brainer if the market starts to sell off and you need to reduce some things in your portfolio, is leave all your calls in place because they're all going to expire without any concerns for you as the seller. So that's the covered call. You see some key takeaways there. All right, scroll down. There's a chart that I can show you. Scroll down till you see that. Okay, here is your Investopedia chart. Investopedia is written at the 8th grade level. That's not to insult anyone in the room. That's to say it's easy to understand. It's like reading the USA Today. If you can't understand the Wall Street Journal, don't read it. Read the USA Today. Again, 8th grade reading level. Otherwise, that article doesn't get published. So same thing with Investopedia. Dumb it down so you can try to understand complex topics. So there in your chart, you have your profit and loss to the left. Then you have your strike price and your price at expiration. So the call is in orange there. So if you bought the call, then you are going to make a profit if at expiration, which again, time is across the bottom, at expiration, if the price is above the strike price, then you've made money. So if you, back to our Blackstone example, 60 was where you bought the call. It goes up to 66. You basically made $600. Now, you paid for that call, so you have to subtract out the $120 you paid for it. But basically, you do the math there, and that's how much you can tell that you're up or down. All right, a comment, never thought about that regarding, generating your own benefits. It's a big deal. I love having calls in place. You just move them. If the stock price moves up, and you can also chase it down too. If the stock price, and we saw this back in March, is I had calls over like Apple. Well, the Apple price starts to drop. Well, I'll buy this call back, which is hardly worth anything, and I'll sell another one right here. And then it drops another 10%. I buy that, and I'm doing this like every 2 days, it seems. Buy that back and then recall it down there. So you always keep the way I explain it to folks is, you're the whale. You're the one that owns the shares. you have the money in life, and the options are the little, like, annoying little fish that follow you through the ocean. And you don't care about them because you're holding your shares, and it doesn't matter what the options person does anyway. So you're swimming through the ocean, doing your thing, building wealth, getting rich. You know, they're doing the important stuff, and the options person is just kind of following you around. Literally, you couldn't care less. All right. So with that, good discussions today. Good questions. I like that. Congrats to, let's see, Apex Predator. I think that's your first win, a free month in the room for you, a free room in the month for you. With that, I'll let you go, and I'll see you guys back tomorrow, same place.